David, markets seem to have broadened beyond the Magnificent Seven towards the end of 2025, but the indexes are still concentrated. Do you expect things to further loosen up in 2026?
That might be the most important question investors have to face. There are signs of regime change. For investors to identify those regime change, by regime change, I mean change in market leadership, that's a critical question. It can happen every 10, 15 years. Concentration is such that in the Russell 1000 growth, the top 10 make up 53% of the benchmark. That's a risk. And we think the market is already beginning to show signs of moving not from growth or value, but to a market of opportunities that's growth and value, US and international.
So sector-wise, where are some of the best equity opportunities that you're seeing?
Well, I'll rephrase the question a little, which is we see some opportunities in areas like we continue to see opportunities amongst AI companies, but you've got to be selective. We see tremendous opportunities in healthcare because it's been kind of left behind. But the reframing is it's not just about sectors, it's what about dividend-paying companies? People haven't talked about those for ages, and because it's been a growth-led market. But there are some concerns that we will inevitably see a wobble in the market. Dividends defend.
So how do you balance growth investing with dividend investing?
So you want to participate in growth, you want to defend with dividends, and I'll add one, you also need to diversify internationally. We think of those as the 3 Ds. So you want to be dynamically participating, defending with dividends, and diversifying internationally. That will give investors the breadth they need as we move into 2026. And I would add beyond. At Capital Group, we take a very long-term view. So we're not just thinking about next year. It's like, what does this new regime look like?
What's been interesting about 2025 is that foreign or international markets have outperformed the US market, even as though the world seems to be deglobalizing. Can you explain all these phenomenons happening at once?
Yeah, I love that you switched to international from foreign. It's definitely about international opportunity. And with the changes that we've been seeing really since 2016, where this idea of deglobalization has taken hold, we would call it reglobalization. One example would be Taiwan Semi. Instead of making all of their chips in Taiwan, they're now building out 5 fabrication plants in the United States. Get them on the other side of on the trade barriers. So companies adapt. We do about 20,000 company meetings a year. It's bottom-up investing. We get this profoundly interesting tapestry of company views, and it means we can invest on the basis of what we're seeing, what we're hearing companies saying, rather than the headlines.
And then finally, can you talk a little bit about the growth of private market assets? That was a huge theme in 2025. And some people are a little bit worried because there's been so much money placed in these less liquid assets. What do you think?
Diversification has its place, as mentioned earlier, and it's important that investors can diversify across different asset classes, and private assets would be one of those. Again, investors need to be selective. Don't just buy into the asset class. Look at what the investor thinks will work within that. There's been a lot made about how many companies are now private. So the stat that's used is 8,000 companies on the New York Stock Exchange or in the US markets, public markets, in 95, and that's halved. What people tend not to mention is that in 95, there were 33,000 international companies. There's now 50,000. It's all about diversification within public equities and beyond.
All right, well, thanks for coming on and talking about it.
Thank you very much.